Ethereum just got another huge bullish signal. While a lot of crypto has been struggling recently, one part of the market has been quietly exploding. Tokenized real world assets, or RWAs, have grown from $2.3 billion last year to $7.4 billion. But here's the really interesting part: around 70% of those deposits are on Ethereum. So while everyone has been watching short term price action, Ethereum has quietly become the leading blockchain for one of the biggest trends in finance. Here's why that matters. First, what are tokenized real world assets? They're traditional financial assets like US Treasury bills, government bonds, or money market funds that have been brought onto the blockchain. Instead of only existing inside banks or brokerage accounts, they can now be held, transferred, and even used inside DeFi. According to the latest CoinShares research, the amount of these assets being actively traded inside of DeFi has jumped from 2.3 to 7.4 billion US dollars in just a year. What's even more impressive is that this happened while the wider DeFi market actually shrank by around 15%. That tells me this isn't just hype, it's real adoption. So why is Ethereum benefiting the most? It's because Ethereum already has the infrastructure institutions need. It has the deepest liquidity, the biggest stablecoin ecosystem, established lending platform, and years of security behind it. Launching a tokenized asset is one thing, but if you want people to actually trade it, lend against it, or use it as collateral, you need an ecosystem that's already built. That's exactly what Ethereum offers, which is why it currently hosts the majority of these deposits. Now, here's why I think this is so bullish for ETH. First, Ethereum is becoming much more than just a blockchain for crypto. It's starting to become infrastructure for traditional finance. If banks and asset managers continue moving real-world assets on-chain, Ethereum is already in a strong position to benefit. Second, this growth happened while much of the DeFi space was slowing down. Normally everything rises together in a bull market, but RWAs kept growing even as the rest of DeFi weakened. That suggests genuine demand rather than just speculation. Third, these assets aren't just being created, they're actually being used. They're being deposited into lending protocols, used as collateral, and integrated into Ethereum's DeFi ecosystem. That's where long-term value comes from. Finally, Ethereum's existing liquidity creates a powerful network effect. The more institutions that build on Ethereum, the more user and liquidity it attracts. And more liquidity it has, the more attractive it becomes for the next institution. Of course, there are still risks here. $7.4 billion is still tiny compared to traditional financial markets, and Ethereum faces competition from networks like Solana and Layer 2s. This also isn't a guarantee that ETH's price suddenly takes off tomorrow, but that's not really the point. The bigger picture is that Ethereum is gradually becoming the blockchain where traditional finance is choosing to build. If tokenized assets continue growing over the next 5 to 10 years, Ethereum looks like it's in one of the strongest positions to benefit. The biggest takeaway is this: Ethereum isn't just powering crypto anymore. It could become the settlement layer for real-world finance, and that's a much bigger long-term opportunity than most people realise. If you did enjoy this video, please leave a like and subscribe so you don't miss future crypto news videos.